So hello and welcome to today's discussion where we're going to be talking about property in the UAE. I'm really pleased to be joined by Turk Ergun, who's been at the company for a number of years now. He was previously based in Doha and now he's with the team here in the UAE. So Turk, just before we get into why the UAE is such an attractive property market, just want to tell us a little bit about your background and how you ended up working in finance.
Of course. So this is my fifth year in the GCC region, as you mentioned, first year in Doha and last 3 years in Dubai. And beforehand, I was in the US, lived there for 24 years, worked for large financial institutions such as JP Morgan.
Oh, that's great. So how are you finding life in the UAE? You've been here sort of 3 years now, as you said.
Yes.
How does it compare to life in America?
Basically, it's very similar. Whatever I found in the US, I can easily find it in Dubai. And it's safe, clean, good people.
So it's not that similar then?
So no complaints so far.
That's
I'm
brilliant.
very happy here.
That's brilliant. And did you see yourself staying in the UAE for the foreseeable?
For sure. I believe Dubai will be my base, and I'm planning to live here for many, many years.
What is it about Dubai that makes so many expats like yourself feel comfortable straight away and so often just plan to stay for the foreseeable?
Because Dubai is very welcoming. So people, locals are very welcoming, nice, good people, very cosmopolitan. You have people from all around the world. Everyone is welcome. So as soon as we get here, we feel like, okay, this is home.
And do you think that's why the city as a whole is growing at such a speed, or do you think it's other influences that have just made it catapult into being?
Of course.
You know, you roll back 15, 20 years, it was, well, maybe 30 years, it was a small fishing town, right? And now it's a global business hub. How has that happened in such a short space of time?
Well, if you ask me to describe Dubai with one word only, I would say vision.
Sure.
Because the rulers here, the government has vision. They make things available for everyone to come in and start a business, start a living, start a new life. So, and the legal system actually works efficiently. When you combine all, it makes Dubai a perfect city to live in.
Yeah, and I think that I would completely agree in that sense in terms of what you're saying about vision, but also the low regulation and the lack of red tape around getting things started. You spoke about business there. Dubai has just really fostered that environment whereby people can come and get set up with such ease, no matter what it is that they specialize in. And that is really attracting investment from all around the world. So you've got the tax side of things, which are making it super easy for people to come here and see the initial benefit of that, but then also setting up a business on top of that. So because of that, we're seeing a significant boom in the property market. So what do you think are the main drivers behind that?
There are so many reasons and benefits why the real estate market is improving and going to a bigger place in Dubai. In general, UAE, I would say, because we do not only work in Dubai, but several Emirates like Abu Dhabi, like Ras Al Khaimah, etc. So number one is, again, less bureaucracy and full transparency and easy to buy and sell. As I mentioned, the easier it gets, the easier for people to come in and then purchase properties as expats and as foreign investors. And second thing is, I would say, it's a booming market, and because the population in UAE keeps going up and more expatriates are moving to UAE. And of course, this drives the housing market prices go up constantly.
Yes, I mean, some people say that it's a bubble, right? Some people say, we've seen this before with the UAE, the property market. If we roll back to 2008, the Golden Mile lost half its value overnight as the market crashed. What's different now? Why are people so confident in terms of it being a long-term investment that isn't about to burst?
Very good, because if you compare 2008 versus 2024, system is more established in UAE. So the legal system and then the businesses that are opened here in the last 15 years, it made a huge difference. It was still an
More of an emerging market at that point.
Yes, it was an emerging market at that point, but today we see things are more settled and established. So huge difference between 2008 versus 2024. And more than that, of course, the government here, they gave more benefits for foreign investors to come in and invest in UAE, plus political stability.
Sure.
Now, I believe Dubai is becoming a new Geneva or new Hong Kong.
Yeah.
It made investors more attracted in investing in UAE.
I mean, we've seen a big slide in Hong Kong of how that's kind of leaving the global sphere, with how China's changed laws there that have we've seen a lot of expats leave that region. Dubai, many are saying, is now the new Singapore or the new Hong Kong, as you touched upon. And we're seeing that investment coming in from China, Russia, Europe, because it's a safe haven for people to keep their capital.
That's exactly what I tried to say. It's a safe haven, and people, and so interesting. Before, you used to see investors coming from rest of the GCC and invest in UAE. Today, it is basically a wider range of investors coming from UK, Canada, Australia, and as well as Eastern Europe and Central Asia, like Kazakhstan, like Azerbaijan.
Sure.
We see many investors coming in. So we have more investors today than 2008.
And of course, it's not just a good place to invest in terms of growth of the actual asset. There are other benefits, of course, that are tied into that, including residency and visas and potential tax benefits that come on down the line. Do you want to just talk through how that works for people?
Of course. That's another reason why foreign investors especially, willing to invest in UAE. First off, as we mentioned, it's safe haven, and people would like to come in and buy properties and live here.
Yeah.
So it's not only an investment idea / people would like to live here because of social life, and also you get a good tax benefit that you don't have in many countries. Like, there is no income tax. It makes a huge difference if you compare apples to apples, owning a unit in Manchester versus owning a unit here in Dubai. And even if you receive the same income here, you don't end up giving away 30% of your income because of the tax efficiency and tax benefits.
Is that just if people live here, or is that if people purchase property from overseas and they own it here? How does that work? And I know it's a case-by-case basis.
It's a case-by-case, and also depends on the country that you're from. But as far as I know, if you own a property here in the UAE, like, for example, my Turkish investors who own properties here, their income is tax-free. So they don't actually have to pay taxes.
So that makes it very attractive against other markets, right?
That's very true. And the other reason is, again, as I mentioned earlier, the population keeps going up here in UAE. So basically, expatriates need more housing. So it drives prices up. Basically, the rental income keeps going up. So it makes a huge difference, because now we have less ROI than 2008.
Yeah. I mean, I think everyone in Dubai has felt, especially renters, have felt the increase in property. I think since the post-COVID time, rental prices have skyrocketed for expats, and much of that's been driven by large-scale immigration from areas like Ukraine, Russia. We've seen a lot more Europeans coming into the market, which has obviously driven up prices. Now, one of the sort of older criticisms of Dubai in terms of a property investment was that, unlike other cities where you have a lot of building restrictions, in Dubai, it's known that you can go out and build on sea, as is the case with the Palm Jumeirah and lots of islands around. You can build out into the desert, and you can build as high as you want. What would you say to people that are concerned about that?
Well, two things. One, again, we still have a high demand, so it doesn't matter how many buildings you build, there's a demand and people keep coming in. And the second thing is, Dubai is not our only alternative, because we have other booming areas in UAE, just like
Ras Al Khaimah,
Ras Al Khaimah, Yas Island, Saadiyat Island.
Yeah.
I mean, if you think about it, Ras Al Khaimah, they just issued the first casino license to the Wynn Resort Casino, and which will be opened by 2026. So you have different opportunities that we can look into. So that's what we do with our clients. We go over all their options and pick the best that works to their interest.
What are people expecting from this? I mean, you just touched upon the change in law around gambling in the UAE. What can people expect from that? And is it going to be a boom like kind of Las Vegas, Macau? Or what are your expectations for that?
Basically, I would not compare Ras Al Khaimah with Macau or Las Vegas. Okay. However, it will contribute to their efforts to grow their tourism. Right. So nowadays we see more tourists coming into UAE, and of course, just like any other entertainment parks, etc., this will also contribute. And I don't know if you've been to Ras Al Khaimah, beautiful area,
stunning.
Yes, I call it as Hawaii of UAE.
Hawaii of the UAE?
Yes.
Very good. Where's the New York then? Where's the LA?
Dubai.
Right? Yeah, absolutely. So do you think that, I mean, a lot of people talk about Dubai as being its own country. When they ask about like the Middle East, people think Dubai is a country. So obviously people overlook the fact that there are 6 other emirates in the UAE. A lot of people know about Abu Dhabi, but Ras Al Khaimah, as we know, is often overlooked. People don't know about it. You said it's the Hawaii of the UAE. What are the expectations other than sort of growth of the impact from the tourism industry and Wynn? Where do you see that city growing into?
Well, again, if you look at what's going on globally, all around the world, Ukraine, Russia, China, US, and what's going on in Middle East, Israel versus Palestine. So it is kind of getting rare to find safe and sound places to vacation. So I think UAE is one of them. So I see a big future for UAE. I believe the economy will continue to improve, continue to get bigger and bigger, and as well as tourism.
And what about infrastructure? So when it comes to tourism, people want to get to the place that they're going as easily as possible. Right now, Ras Al Khaimah is a Northern Emirates, maybe an hour and a half north of Dubai. What are we going to see in the future? Do you expect there to be an airport? I know there's already an airport in Ras Al Khaimah, but it's not really a major international hub. Do you think that will develop as well?
Of course. So one thing I'm so impressed with UAE is their infrastructure, and they're really, really good at planning and implementing. So what I see in the near future, we will see more airports all around UAE and bigger airports. Yeah. And of course, I don't have to say how their services is in UAE. So they have been doing a great job and servicing tourists, newcomers, people, plus an efficient infrastructure. It makes it amazing.
Okay, so there's obviously a lot of property that's already been built in the UAE, and there's a lot going on as well. There's no shortage of cranes as you look around. For a client who's investing, and you sort of mentioned the clients that you've helped in Turkey, who are looking at it as an investment opportunity, do you favor stuff that's already built, or are you more interested or attracted to the off-plan market?
Very good question. It depends on what investor needs. If they're looking for an immediate income from investor's point of view, obviously I would recommend one of the completed projects. However, if they're looking for a long-term investment, and if they like to get a little bit, pay a little bit less than the completion date, then I would definitely recommend an off-plan, because usually we are able to offer some units 20-30% less than the original price.
Okay. And thinking about kind of off-plan versus already existing buildings, what protection is in place? Because I know there's been horror stories in the past, going back pre-2008, about people losing money in the off-plan market. What's changed, and how is that more robust than it used to be?
Very, very good question, because we have the same problem all around the world, same in UK, same in any other countries. And however, as deVere, we do our due diligence very well. We only work with companies that we can depend on, rely on, and one of them, for example, is Aldar. It is, I would say, half government entity, and we know that they have financial strength, and we know, based on the projects they have already completed, how successful the new projects will be. Okay. So it's all about due diligence and be careful. That's why when I talk to my clients, you have to come in and then work with a solid company who will be your advocate in the region. There are so many companies that I would not recommend, but it's not only for UAE. Any other country that you go, you have to be careful and you have to do your due diligence.
So, Turk, you spent the majority of your life living in the US, but you are, of course, of Turkish background, as the name would suggest. So you've done quite a lot to help people who are based in Turkey with their investments. You just want to talk about how your kind of background has allowed you to understand the problems that people in Turkey face, and how you go about assisting them.
Of course, investors in Turkey, they're not much different than any other investors in any other countries. Nowadays, what I'm seeing is people are looking to diversify their assets. So nobody likes to keep all their eggs in the same basket. So whether it's Switzerland, whether it's UK, whether it's UAE, now more and more investors are looking to diversify and just to have more options in case something goes wrong. So this is the motivation behind Turkish investors, I would say.
I mean, it's a good point you make, right? You just mentioned Switzerland as being an example. And we look back only last year when Credit Suisse hit the rocks and had to be acquired by UBS. You think about the US as a market where people always trusted as being a kind of safe haven for capital, and rolling back to 2008, we saw the Lehman Brothers collapse. So there is no sort of place in the world that is completely immune to financial difficulty and volatility, right? So feeding into that conversation about diversification, what options are available for people in Turkey that you'd say they need to diversify away from?
I can talk about my own clients, existing clients. First thing, they would like to keep some of their funds in Isle of Man, and because of safety concerns and because of rules and regulations. Isle of Man is one of the most regulated country on earth, and it is still a Commonwealth country. And we see big financial institutions have branches in Isle of Man, just like Barclays, just like HSBC, etc. So this is one. And the second big area is properties. So my clients, they usually own a property here in the UAE or in UK. Right. And it's interesting that you brought up about Switzerland. Last year, we start seeing Swiss banks are closing foreign investors' accounts. So it became a more common practice. So, of course, Isle of Man and UAE is also offering some alternatives to our investors in Turkey.
Is it just the Isle of Man you work with, or are there any other sort of safe havens you use?
We have several places. For example, Mauritius is one other option that our clients utilize, and UAE, and then as well as...
You've got your Jerseys and your Guernseys, I guess, as well.
Guernsey, Jersey.
Channel Islands.
Channel Islands.
Historically, little small rocks in the middle of the ocean that are extremely financially robust. So let's just move into... Turks looking at overseas investment opportunities. What do they generally look for as the most attractive opportunity? What are the favored kind of assets there?
So there are two types of assets they're looking at. One, real estate. Turkish people are big in real estate because they're looking to have an ongoing income.
Sure.
So that's number one. And of course, Turkish investors, they like to have tangible assets. That's why property is a good option. And also, they're looking for, again, midterm and long-term growth. So they're interested in mutual funds that we offer, as well as bank structured notes that are being utilized by Turkish investors heavily.
Okay. Let's just talk about the property side of it for a minute. So in terms of investing in Turkey versus investing overseas, what's the main difference that you kind of discuss with clients as to why they might want to look to do that?
Perfect. So one of the main reasons is the currency. So they can easily choose the currency they would like to have in Isle of Man, like in Mauritius. So like USD, sterling, like Japanese yen, Swiss franc, etc. So it makes a huge difference because we do see we saw some devaluation of Turkish lira in the past. So it's a way to protect the value of their money by keeping them in foreign currencies.
So stronger currencies, moving away from the volatility. What are your thoughts on the kind of future for the lira?
Lira, based on my observation, the economy is being managed well right now, and they still have, after rough 2 years, now it's going back on track, but I think it will still take another 2 to 3 years before seeing a solid improvement.
Okay. And for clients investing in another currency from where they live, what considerations do you go through to think, okay, are we going to go for euro? Are we going to do dollar, sterling, yen? What
all
goes
about
into that?
diversification. So again, I believe in keeping the eggs in different baskets. So it's perfectly fine to have euro /USD /sterling. So that's what I would do.
And do you ever dabble in the kind of the newer, more shiny and exciting assets like cryptocurrencies? Because a lot of people sort of mention that as being a great diversification tool. What are your thoughts there?
I totally believe in it. However, it depends on what percentage of your assets should be invested. In my, based on my thoughts, I wouldn't invest more than 5% of my assets. This is how I look at it. I see a digital currency. For sure, there is a future for that. But again, it's all about diversification. We don't want to keep all our eggs in the same basket.
Okay, so you mentioned also, so we've dealt with the property side of things for people in Turkey. Mutual funds is next. Well, for people who aren't aware of what a mutual fund is, do you just want to talk through that and explain how investing into that, in contrast to buying into direct equities, perhaps, is something that's a kind of good idea?
Mutual funds is perfect for clients who are into... mutual funds is great for investors who like to see a good earning potential. However, they would like to manage their risks. In mutual funds, instead of investing in one single stock position, so you are investing in pool of number of stocks pooled in a basket. So instead of investing, let's say, only in Apple stocks, now you're investing in 100 different companies. That's one example. Of course, there are so many different types of mutual funds. So one bad
apple doesn't spoil the bunch.
Exactly. And the second depends on what you need. So if you're looking for an income, obviously, the mutual fund that we can pick will be different than a person who's looking for a growth.
Okay, so like nowadays we're seeing a huge increase in the number of DIY investors, right? People using trading apps like Interactive Brokers and eToro, where when times are good and the market's flying, people go onto there and they buy some Apple, some Chevron, some Bank of America, whatever it may be, right? And the stocks do really well, so people get overzealous and excited in doing that. When times are tough, as they were sort of 2021, people panic and sell and make losses. Where does the role of a financial advisor come into that in terms of offering benefit over your investment account?
Of course. So I believe in periodic reviews, sitting down with my clients. I think that's one of our strengths. One thing when money is involved, people tend to panic easier.
Sure.
Versus, I always tell my clients, let's do the Warren Buffett style. Because what I noticed, investment is the only area investor would like to get in when it's too expensive, and they want to get out when the market actually starts going down a little bit. So they panic.
Sure.
So that's when we come in. So we tell them, okay, this is basically what we think. This is where the market is heading to. Maybe it's a great time to utilize benefit from dollar cost averaging or unit cost averaging, however you like to call it. So it's an ongoing advice. So instead, when markets go down, I usually take the initiative to call my clients, Mr. Client, did you see the market? Instead of hiding from them, because that's when they need us.
Is that a difficult conversation when the market's not doing well? So say you've just taken on a client, they've invested, let's say $1 million, and we're 5 months in, the market's not done so well, as it often does at times, and it's down 8%. So that conversation straight away, that portfolio in this example would be down 80 grand. And you go to them and say, the market, this is a good time to put more in, perhaps, right? How does that conversation go?
I mean, in my 24 years of career, what I've been seeing is clients feel comfortable if they're kept in the loop, if they're kept educated. Like if you call them and tell them what's going on and what you expect based on analysis, expert reports, etc., they understand.
Got you.
However, if you just ignore letting them know what's going on,
doubt,
they panic.
Fear.
I would personally panic, and you would panic. So it's very normal.
Absolutely. I guess it's like being on a plane. If you think there's a problem, you want the captain to just do a little.
Exactly.
Ladies and gentlemen, everything's under control, which is probably what you're there to do, and hold their hand through periods of volatility. So we've knocked off property and funds. Let's just talk finally on structured investment notes, which is something that not a lot of people would organically know about, right? Then they're a bit of an unknown entity or product which is available for investors. Talk us through how they work and why they've become so popular among clients who actually have been introduced to them.
Great. Structured notes are designed for investors who like to have the earning potential, but have some type of limited downside protection.
Okay.
So simply how it works, if certain conditions happen, the note will pay a certain coupon payment to our investor. However, let's say this note is linked to a certain index. And in this case, if the downside protection is 35%, even that certain index goes down to 35%, the bank is assuming the risk. So it is good to know that you get some portion of you get some protection that makes you feel, that gives you peace of mind.
Okay, so we're saying that, kind of to summarize it, that the market can fall and clients will still earn a return.
Correct.
Right? So
Correct.
If we took the S&P, for example, as a lot of the notes track, the market could fall by up to 30% in a 3-year period, and the client could still make 18. Is that
very good? And some of our structured notes simply offer 100% principal protection. Some of them, they offer 90% principal protection.
So that means that the max you could lose is 10% if the worst case scenario would happen.
Exactly. So that's why I always suggest our clients to be very careful and match whatever they want, their risk appetite, with the note that they're choosing.
Okay.
It's very important.
And how do you work out risk appetite?
So basically, it's about knowing your client. It's about the risk level that they would like to take. And once you find out, it makes it easier to offer the type of investment vehicle that fits their risk profile.
And what feeds into that decision making? So are we talking about their age? Are we talking about their assets?
Age, target, the long-term goal, their time horizon. So these are all important points that we need to factor in.
Okay, interesting. Turk, you're of Turkish background. You're a very committed Muslim. You spent a lot of your life and your early upbringing in the US, and now you're living in the Middle East, where, of course, Shariah-compliant investing is a hot topic. How do you sort of go about the conversation of speaking with Muslim clients about their options in the Shariah-compliant investing market?
Of course, my Muslim clients' options were very limited in the past.
Right.
So they would like to have the earning potential. However, their faith doesn't allow them. Today, they have more options. Now we do offer. Once I find out that my client is Muslim and sensitive about his or her faith and looking for a Sharia-compliant investment vehicle, now I have options to offer him.
Okay, interesting. Let's just drill down into why the faith of Islam does not allow for growth, as you just mentioned. How does that work for people that don't fully understand
in Islam, of course, I'm not an expert, but based on my knowledge, interest is not allowed because in Islam, correct me, Mohammed, if I'm wrong. In Islam, Islam is not allowing any income without any effort. So we call it riba, so which is not allowed in Islam. So we are more than fine to invest for a growth potential investment vehicle, but has to be compliant with Sharia.
Okay, so does that mean that interest-bearing products then, in that case, are not permitted under Islam?
Correct.
Yeah. Okay. Is there anything else in there? Because I know that there's one fund by HSBC, the HSBC Islamic Equity Shariah-compliant Fund, that exclude certain things that they can invest in. What are the exclusions?
Yes. So we do offer funds that basically excludes interest. Like they are very careful choosing the companies that they invest in their shares. And what we are looking here is an official Sharia compliance stamp. So that makes us feel comfortable to offer our clients, and our clients feel comfortable investing in those.
And what's that called for people who are looking out for it?
Okay, so basically it is almost a guarantee that the investment vehicle that client is investing is not an interest-bearing account.
Okay.
This is one side. And of course, it is...
And this is fatwa, right?
Yes. Basically, it's coming from a Islamic committee that puts the stamp on.
Okay. So no stamp, no good.
Exactly.
Okay. So you said that the options are expanding in recent years. What's been the drivers behind that?
The more demand. Nowadays, more Muslim investors are looking to invest in higher potential return investment vehicles, and that drives companies like or banks, financial institutions to come up with more Sharia compliant fund positions.
What do people need to watch out for if they are quite devout in terms of their Islam and they're looking to invest? Are there any pitfalls? Are there any people who are putting things on the market that perhaps aren't Shariah compliant, but they're being advertised as that?
Very good. The due diligence. So they basically need to work with recognized financial institutions products. I always feel comfortable with Franklin Templeton, for example, Skook funds. I feel comfortable with Deutsche Bank, HSBC. There are so many solid options that we offer our clients, but they need to be careful.
Okay, because there's always people that'll try something to make a quick buck, right? So they need to be guided through that process.
Just like the property market, you have to do your due diligence, and you need to work with people who know what they're offering, and who's already done their due diligence. So that's very important.
So if someone wants to have that conversation, they're Muslim, they're looking to invest, but they're a bit nervy about sort of not finding the right thing or what to look out for, come and speak to you, right?
Exactly. So we are here to offer our services. So we go through them one by one, and we find them the right product.